The next 3 tutorials are examples of how data needs to be entered for 3 different types of projects. The first project is the purchase of an existing house and land with plans to renovate the house, and hold for long-term cash flow and growth. So that I don't waste time entering values for this project, I have already prepared a copy of the feasibility program with values that are appropriate for the project. When the program starts and displays the home screen, I will elect to remove the sections that are not required from the data entry screen. In this case, I will click on the Strata or Subdivision button, the Construction button, the Project Assessment button and the Affordability button, and then go to the Data Entry Sheet by clicking on the Go to Shortened Data Entry Sheet button. When we move to the Data Entry Sheet, you will see that I have entered some information in respect of the property that I am planning to purchase in the Property Information section. The most important selection is the selection of the state from the drop-down list. The program will determine the postcode and likely local government areas from the suburb that is entered and the state that is selected. On the right-hand side, I have estimated the value of the vacant land, although a more accurate number may be available from a rates notice, and will be listed as the unimproved capital value of the property. I have also estimated the market valuation on the expectation that a bank valuation will be slightly lower than the purchase price. The statutory valuation is also entered, and this can also be obtained from a rates notice or land tax assessment, and is the value of the property as determined by the valuer general in each state. I have entered the confidence as 95% so that 5% will be added to all costs as a contingency, and the number of titles in this project will be 1. The selection of the GST BAS reporting is ignored because I have chosen GST Scheme A for this project. This scheme is the appropriate selection because GST is exempt on existing properties that are held and rented, providing any subsequent renovation is not considered to be substantial. Further down you will see that I entered costs that are typical of those associated with setting up a trust structure with a corporate trustee in the pre-purchase costs. I have also entered costs for the preparation of a joint venture agreement and pest and building inspections. The reason these are entered as pre-purchase costs is because they are costs that we will incur regardless of whether we proceed with the project or not. Any costs that fit this description should be included here. In the section for purchase costs, I have entered the anticipated purchase price, and the program has automatically calculated the cost of stamp duty based on the state I have selected above. I have also entered other costs that are related to establishing bank loans and the transference of the title to my structure. The program has totaled all of these costs to give me a total purchase costs. As our plan is to hold the property for cash flow and growth, I need to complete the section, Operating Information for Hold Properties. You will see that I have estimated that the property will be rented for 52 weeks a year for $900 per week. I have also included the costs of holding and managing the property. Amounts for council rates, repairs and maintenance, insurances, utilities and accounting fees have been included in the outgoings. I have also elected to enter the management fees as a percentage of the rent, and I have entered 5.2%. Further down this section, I have entered 6% as the anticipated annual capital growth and 3.5% as the expected CPI. These will be used by the program to estimate cash flow and capital growth for the next 10 years. I have also entered amounts for the value of fixtures and fittings and improvement costs so that the program can estimate the claim for depreciation in estimating the after-tax income. The plan for this project is to renovate the existing house, so I have elected to set a budget for the renovation at 8% of the purchase price. I could also elect to estimate the costs more accurately and use the columns provided to list the costs, and select the option to use the entered amounts as the renovation cost. The next section displayed is the timeline section. The subdivision and construction sections will all be hidden from view because of the selections we made on the home page. The first start time and duration we need to enter is for the settlement period on the purchase. We also need to add a start month and duration for the renovation of the existing dwelling. All other tasks can be left blank. The next mandatory section is the sales information, property values and miscellaneous income section. The project involves a single property, so we need to enter the anticipated market value of the property as it would be at the completion of the project. An amount needs to be entered regardless of whether we are holding or selling the property. You can see that I have entered a value in the existing or post-renovated properties section. Values must be entered in the correct section so that GST is calculated correctly. Also notice that I have entered the word hold under the property value to indicate to the program that the property is not to be sold. To see an estimate of the profit on the project if it was sold, I would need to delete the word hold and then enter a settlement period for the sale in the timeline section above. I may also have to input some other data such as sales costs to complete the data entry for a sale. For the purpose of demonstrating this project, I am going to return to the sales section and designate the property as a hold. The settlement period and any sales costs I may have entered will be ignored. Further down the sales section you will see that I have not entered any sales costs because the property is to be held. The final mandatory section is the financial information section, and I have entered the interest rates on my loans and the loan-to-value percentages that I could expect for the purchase of the property. This completes the data entry for this project, so now we can examine the financial results. The easiest way to do this is to turn on the watch window. We can do that by clicking on the button at the top of the data entry sheet or pressing the keys Ctrl, Shift, and F1. The watch window displays the anticipated profit or loss, and in this case we have a substantial loss which represents the total cost of getting the property to a point where it can be rented. It also displays the pre-tax and after-tax income or loss. The result in this example would indicate holding the property would be cash flow neutral. We can also look at the potential for profit if we elected to sell the property simply by deleting the word hold in the sale information section of the data entry sheet. We also need to add a start month and duration for the settlement period of the sale. Now you will see that there is a profit on the sale. When we return to the hold option, we can analyze the results further by looking at the cash flow sheet. The start and duration of the settlement period we entered for the sale will be ignored when we elect to hold the property. This sheet details all the purchase and development costs, as well as reporting the annual cash flow in percentage terms against the cost of acquisition, equity and investors' cash outlay, so that simple comparisons can be made between this and other projects. The equity growth sheet gives us a picture of how the asset will perform in terms of cash flow and equity growth over a 10-year period. This has been an example of a relatively simple real estate project. Please continue with the second example of a more complex project involving a subdivision.